This is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week. The weekly stock market analysis show, we will look at the technical charts and try to understand what happened in the market during the previous week and then plan for a better trade for the upcoming week that's starting from tomorrow, Monday, May 27, 2024. So let's come back to this slide after we look at the few of the charts. So this is the weekly view of Nifty in the Banknifty. That you see here, multiple flat breakouts following a cup and handle is seen on both indices clearly. It's trending. It's a weekly charts. We have another weekly chart for the indices that's seen here. We can see that's well within the trend line, and price is breaking out of the flat pattern right now on the Nifty. This is a daily view, consolidation, and then gap up, and then it's up move since the beginning of this year, and right now it's going up and down with high volatility within a parallel channel on both indices. The volatility is even big in the case of Banknifty. Candlestick patterns, if you see, weekly candles is wide range bullish on both indices, and you can see clear consolidation since several weeks now, at least 10 weeks or so, and then the breakout has happened, hit the 23,000 all-time high, big move week, and remember we had a similar move on the previous week as well. So that's big breakout move as we move towards the end of the election poll outcome awaiting, right? Bank index also, absolute consolidation has been what was happening with more volatility, and it does not hit the all-time high, neither had this broken the 50,000 yet, but it's 1,000 points far away from that. It's getting closer. So once that breakout also happens, there is higher likelihood that 23,500 can easily get changed. That's what it shows as the weekly candle. So candlestick wise, it's wide range bullish. Daily candlestick wise, it's another big move, wide range bullish candle on the Bank Nifty, but on the Nifty, it's an inverted hammer. There is some profit booking right on the top. Otherwise, daily candlestick moves for the last week alone, if you see, it was just continuous breakout for the last 3 days, 4 days, trying to move up and up. That's what you see. That's the daily view. Daily candlesticks, Nifty candlesticks is close flat, while Bank Nifty has gained 0.5%. So Bollinger Bands, you're once again seeing an expansion of the upside on Nifty on the right side and on the left side, and Bank Nifty also shows an expansion of the Bollinger Bands in the short term. Right, so it's working on bands that has already begun, which is clearly bullish biased on the Nifty, and Bank Nifty is heading towards that, looks like. So Bollinger Bands indicates more of a. Now let's wrap it up. So we had an extended up move, another 2% from the previous week, and market has broken out and hit the all-time high, and from the wide range bullish candle with 2% gain, 453 points once again gained. Just 2 weeks, it's probably 1,000 points nearby that's gained, and it's 37% nearby rally that has happened after multiple breakouts of flat patterns and cup and handle and all that. Bank Nifty also further extended breakout, did not hit the all-time high at 1,000 points away from that, but it broke out with a wide range bullish candle and 7.6% similar to the last week with 773 points. So together it is 1,500 points nearby. That is gained in just 2 weeks, and it's about the 20 weekly expansion moving average. Same in the Bank Nifty also, it's greater than the 20 weekly expansion moving average. So Nifty also. We had seen that multiple cup and handle patterns break also in the Bank Nifty as well. And remember, the rally has gone for as far as 29%, 5% to 8% correction on both the indices. The biggest retracement so far has been that 5% max on Nifty and 8.5% on Banknifty. So that's the max retracement so far. This time it was very quick. It was less than 6% of retracement this time. The bank 4.5 less than that percentage of retracement this time. Well, within the trend line channel that we had already seen. So daily, it was flattish close for the Nifty with a more kind of candle on Nifty and a bullish candle with less than 0.5%, 4 to 200 points gain on Banknifty, more than above the 20 exponential moving average supports. Basically, market has hit and moved further above the 23. Did not manage to close above that 23,000 big rounding number. Remember that, but it hit an all-time high. And it's last week. The election outcomes come on June 2nd, and exit polls and the actual results will come on 4th June. So that's a very, very a major event outcome that's coming the next week. Next week, the last week, the markets can react. So it's likely to continue this behavior. Also keep in mind the volatility has been rising up at the same time the market is also attempting to hit the all-time high. So that's a contradiction, and that's what happens prior to major events that happen once in a week, once in a 5 years. Such major events, weeks naturally rise up. So after the next week, after that, what happens is unpredictable, right? You do not know what the market will predict. It's absolutely foolish to technically analyze and then predict some levels. It's very difficult. You can think of probabilities and all that, but everything can go for a toss. All analysis can go for a toss when market has major event outcomes that's awaited, right? The fear and greed and all that behaves in a particular manner, which could be quite unusual, and then that's what many things could go wrong, right? If you try to predict the market levels. So Bollinger Bands, we have seen that it's an expansion on the upside that's beginning, and it shows bullish bias. Bullish price over the median of the Bollinger Bands, and then Bollinger Bands expansion seen on Banknifty as well with a bullish bias indicating potential upwards. Let's quickly go further and try to see what are the support resistance levels. So all them highs 20. So big rounding number 23,000 is going to be resistance here now. And after that, market can go another 100, 200 points to 23,200. That's the top of the channel. You have to be careful there. But there is an outside trending channel where it can go as high as 23,600, 700, that levels as well. That's a possibility. If that inner trendline channel is conquered and have green close above that. So after the 23,000 resistance, it will be 23,100, 200 up to 23,500, 600, 700. Right? So each of the rounding numbers after 23,000 can be considered as resistances because it's an uncharted territory after all-time highs. Downside supports could come in at 22,800 major support. That's where the breakout happened. That is where the rounding pattern all that is there. That's going to be major support. 22,800. A breach of that could mean that we could be ending back to the bottom of the trend channel once again. So once that is breached, 20 exponential moving average at 22,500 nearby, 22,484, 20 demo exponential moving average could be support, and after that 50 exponential moving average at 22,320 could be the next support, and then the 23 Fibonacci retracement is in confluence with 22,000 nearby zones, but 21,935 is acting as 100 exponential moving average. That's where the supports are coming, right? So 22,000 is also a very good support, and 23,000 is a very big resistance. And once these are reached, then these 1,000 points is where the action is. And that is reached, then anything would happen on the upside or downside. Now for the Banknifty, the first resistance now would be the 50,000 major resistance, right? Because 49,000 is conquered and prices 49,000 also is not. The market did not manage to close above that, even though it hit a 49.50 above the previous week. So 49,000 will be the first resistance. After that, 49,500, and then the big rounding number 50,000, because that's for the channel. Both of these channels confluencing has a major resistance. 50,000 would be a major resistance. So if the price rising above the 23 on the Nifty and 50,000 is hits, that may be the time for profit booking or getting out of this whole, until some retracement happens after that. So let's come back. The Banknifty is first resistance 49,000, then 49,500 and 50,000. Downside resistance will be 48,200, can have some support of 20 exponential moving average, and then 50 supports could come in at 47,850, and then rounding number 48,000 is coming in between that source support zones, and if that is breached, 47,266 is where the 100 exponential moving average support is there. 46,255 is where the 200 exponential moving average is there, right? But 47,000 is where the swing lows are there. Higher high, higher low will get breached if the price moves below that. So you gotta be careful of that zone. So that's the zone that you're watching on the downside. So it's basically between 47,000 and 50,000 where the price action is going to be there. So once these are breached, then we may have trouble, right? And moving ahead, if you try to analyze the trend of the momentum indicators are clearly showing that market has recovered the lost momentum in the short term, and it has climbed to the bull zones once again on both indices. And on the medium term also, Nifty and the Banknifty, both of them has climbed to the bull zones, and that can clearly be seen, right? It's climbing again. So momentum is completely recovered. Trend indicator, if you see, it's also crossed over to the bull zones, but it's weakly bullish. Right? It's bullish, but it's weakly bullish on both time frames, on both indices. That's what you can read through this and understand. But momentum has picked up. It's bullish, and it is bullish clearly, and rising momentum. But trend has crossed over from the bearish to the bullish on both indices, but it's weak. It's not very strong. There's no bullishness in the trend. The trend would come out the next week. That's what we're waiting. So the next one is very, very, very interesting. It's not something that we used to see every now and then. It's once in a 5-year event, as I said before. The India VIX has spiked up another 6%, and it's 120% of rise in just 1 month, 4 weeks. So it's at 21.71 from the 10.15 or something. It has moved to 21.75 VIX in a matter of 4 weeks. So it's in a high volatile regime. We are extremely cautious. That indicates the fear that is there in the market, the fear and the greed index is what India VIX is all about. Now, with respect to the difference in the implied volatility and the relaxed volatility, it's in favor, but it's still very high. The premiums are high, of course, and 90% at 99. So option sellers is gain, but it's at very, very high risk. So this is happening before major events. This behavior of the markets. How it occurs in the markets, you have to be very cautious, and if you're a novice trader, just stay out. Even if you're a professional trader, it makes sense to stay out until the election outcomes are there. Even if you are having positions, hedge some completely the portfolio level as well as the position level, and have control your position size. Basically, that's the only way to survive such major events. And moving ahead, if you try to understand the open interest, it's a long build up in the futures. It's very bullish. And if you see the May 29th and the May 30th expiry on the Banknifty and Nifty respectively, the monthly expiries, you can see the options open interest is bullish again with respect to the PCR 1 above and Nifty and 1.11. That's clearly bullish on the Banknifty 1.11. So PCR put call ratio is indicating bullishness. Now if you look at the options data for the expiries of Nifty and the Banknifty, you can see that the levels are very tight. For 23,000 and 23,500 is very narrow range of 500 points where the highest put and call writing is seen, and 22,500 and 23,001 again very narrow where the second highest put and call writing is seen, where the support and resistance can be made out. Banknifty also has a not very wide range. 48,000 to 50,000 is where the highest put and call writing and support resistance are seen. Second highest is also very narrow. 48,500 and 49,000 is where the second highest put and call writing is seen. PCR and futures. So overall, it's absolute bullishness is what open interest rate of the futures and the options is indicating. Let's move on and see what the sectorial indices, the major sectoral indices are saying. IT sector has moved up. Almost all sectors have moved up actually, right? Except for the pharma which closed flattish, but even that is positive close. So IT, metal, auto, pharma, FMCG, reality, all of them have moved up. And where we can take questions for it is bullish on both time frames is the metals, auto, the reality. But FMCG, pharma, and IT has to wait for some more before the bullishness is caught up. Right, it's 1% up. It had been big moves of metal, 3.3%. IT sector has also caught up, but it's still sideways in both time frames, medium and short. Right, big moves. We're also seeing the auto sector 2.3%. Pharma was flattish, right, and its short-term momentum is still sideways. Still, I'll wait for before taking a move. So overall, we have a mixed bag here, but none of them are bearish and the bear zones. But, we have three major sectors which are leading the rally, and we have others which are picking up, other sectors which is getting rotated and picked up. So if you analyze the sectoral indices charts, left side you can see that the Nifty index is taking a support at the RSI 40 levels and trying to move up once again. It's a cup and handle pattern. Let's see it in the index of the IT. Moving ahead down, if you see the metal index, it's at all-time high. Be cautious. The top of the channel is inverted. Had a shorter breakout. Let's see momentum and trend absolutely bullish. Auto also at the top of the trend line channel, breaking out all-time highs. Need to be cautious. Momentum is bullish. Trend is bullish. There is a divergence, bearish in nature that you can see. You have to be cautious. Trend and momentum are absolutely in bullish zones. Time for some caution. Pharma is consolidating and it's a flag pattern that is forming. Breaking out could happen, and momentum is bullish. Trend is also close out bull zones. FMCG has been consolidating and seems like it's trying to break out and then go back to the top of the trend line channel. Time for getting into it. Momentum just climb the bull zones and the middle zones. Reality index, time for caution. That broken out from the flag pattern at the very top of a trend line channel. Probably some retracement could come in. Moment is bullish, trend is bullish. Now, if you look at the heavyweight stocks that contribute maximum to the index, let's see what has happened. So, looks like a very wide bullish move has happened on the HDFC Bank. Potential flag breakout could happen here. Overall, it has been consolidating in a very wide range, and trend. And momentum is still sideways, trend is still sideways but rising up, right? So until it reaches the 1,700, you don't know what happens. Lens Industries weekly charts are showing the potential for a flag breakout. The price has been consolidating. It's a rectangular consolidation and flag pattern breakout possibilities there. Only clients bull zone. So Lens back into the bullish momentum. ICSB has been the strongest. It's already in bull zones. Our space rose to the top of the channel and green close. Good volumes on all HDFC, Reliance and ICICI Bank. Reliance and ICICI Bank have bullish momentum. Right, and moving ahead, Infosys and TCS, two IT stocks on the left side. You will see that it's a flag, very wide flag, and the momentum has climbed in, is in the sideways zone on both, and then trying to move up sideways. IT stocks. Kodak Bank has recovered from a big fall following some bad news from the city side. Has climbed back in the sideways from the bear zone, so again sideways. IDC also sideways, but the flag breakout, very long big flag breakout possibilities there. It has been consolidating and retracing for some time. If it breaks out, it could give a good move. Only is still sideways. So overall, ICICI Bank Reliance is holding the market. Others are all sideways, but trying to move up and break out. Mid cap and the small cap index are at the all-time high. Mid cap all-time high. Small cap also very close to all-time high, but there's some consolidation, some resistance that's seen there. Momentum is bullish, trend is bullish. So broader market indexes is what we are seeing. So the rally is happening across the market. Institutional participation, if you see, foreign institutions has been buying 1,166 crores last week, excluding the Saturday. Most institutions has bought nearly 7,000 crores. So overall buying net to net, if you see derivatives also, the 5 days have moved up last week's with respect to the net long. So yeah, so totally small time buyers. It's very small time buyers. They just bought big time, only 4,000 crores on Thursday. As majorly sellers. Fyers continue to be sellers is a worry, but for this week it was net buyers, which is good. Institutions has been buying too much, and the retail money is holding the market literally, because the Fyers, although they were buying a little bit this week, but net sellers for a very long time is the reason why the breakout is slow. Moving ahead, if you try to understand the global markets, currencies, global commodities, etc., begin with the currencies. Dollar is closed red, it's closed green actually. It's a 0.5%, 5% up actually, 0.25% actually. So it is a cup and handle consolidation is what is happening. Breakout could happen about the 107. Right now it's 104.75. Momentum is sideways but rising up after having fallen from the bull zones earlier. So dollar is sideways. USD was down 0.30% down. That's a good fall that we have seen, but always the 83 level above is still there. So it remains weak, just like before. It is centrally managed. It has been above this 83 and or between the 82, 83 levels since a very long time, very long time. So rupee remains weak. USD has fallen down. Now it's at 83. Small gain has happened this week with respect to rupee, but still remains weak. So it's a positive with respect to the currencies, at least. No big move from the dollar index, and then some gain in the rupee. Crude oil is showing a red. That's more than 2.2% downfall. So it has retraced. Remember, it had made big 23% of up move from here down towards the top of the trendline channel, but some retracement has come in, which is a relief for, and small limit sideways. So that's a relief for oil in body country levels. Crude oil is now at 77.75 nearby. Gold had seen a breakout. It hit all-time highs last week, and now we have a downfall of 6% or something. So it's 3.4% low last week, and it's almost 6% from the top all-time high level. So some profit booking may be happening in the gold. Gold is a hedging instrument. We had a 26% breakout in gold happen when the worry was that the equity market could be shifting the money to safer havens. That worry is still there because it's not too far away from the all-time high. So that's about the global commodity of gold hedging instrument. Some relief, temporarily at least, with respect to gold and currency and the crude oil. US markets are showing a mixed bag. The technology index Nasdaq has moved up another percent, and Dow Jones has moved down double of that, 2.5%, and it's a flat broader index of S&P. So it's a mixed bag all over there, but otherwise momentum is still bullish. It had a 6 to 8% up from the previous swing low to the new one. So it is still not very far from the all-time highs, and although this week it's a mixed picture that's coming, but momentum is bullish. So overall it seems to be positive. So this is what global markets, US markets, the market. It's at all-time high, some pullback, negative week on the Dow Jones, but technology index is breaking all points again from the all-time highs. New all-time highs being made. Absolute flat close at the all-time high at the S&P 500, which is the broader index, right? So momentum is absolutely bullish on all of these things, three. So that's positive. So if the mother market is bullish, our market also is likely to remain bullish. So global commodities is currencies, and US market is what we have seen now. We have the max numbers in the stock picks too. Adani Ports is having a potential for a breakout from here. So it has been consolidation. It's a green close, and it has got a positive reverse divergence in the momentum on the medium term. Volumes are also decent. So trend is also close to the bull zones, although it's slightly weak. Also, if with tight stop losses below this week's candle low, there is a potential for a swing trade opportunity. It may not extend more than 2 weeks. NTPC power sector as such is breaking out, and it's some consolidation that is happening. Potential for a big breakout can happen here. Moment is good. Moment is good. There is a positive reverse divergence with bullish intention of the momentum. Trend is also in the bull zone, so it's falling slightly. But have tight stop losses below that consolidation zone that will be rewarding for a swing trade opportunity. This NTPC, National Thermal Power Corporation, and Adani Port good long calls for the next week. So have tight stop losses because market will react while given the volatility is about 21. So this is a payoff. This is slightly risky. A payoff. This is known as call ratio back spread. It's selling 23,100, right? 100 points above where the market is right now. Twice that of what I'm sorry. It is buying twice the call option, then and selling half of that at slightly less than what the price is there, 22,850 call. So it's selling and buying, but buying twice that of what is sold. Right? It's call ratio back spread. The advantage is that market is likely to react violently either on the downside or on the upside. So we are betting on the upside. If the market breaks out, it will really break out post the elections. Means the pre-poll rally. Right? So if it breaks out, then definitely we'll make money. But if it is breaking down instead, then we don't make money, but will not get into loss. Then market is less likely to stay in that very small amount. So that's the thought process. It's slightly risky, but risk reward is limited. Have small portion size. Get out before 30th itself, before the expiry itself. Get out. Premiums are very less that is required. Percentage probability of profit is also not that great, but 65% is okay in this kind of market. So if you want, you can play with low portion size and tight stop losing risk management and portfolio level hedges and risk management, right? So there's a pair for the Nifty options call back spread, call ratio back spread strategy for the weekly for the last week of May, monthly expiry. Let's try to wrap up. So market basically extended the previous week's reversals further and broke out of new all-time highs. We're capturing this momentum that the trend that lost previously. So 2 weeks of up move with the price above the 20 exponential moving average, higher low maintained, and total correction so far in this 29 to 37% of rally is only 5 to 8.5% in Nifty and Bank respectively. And it's a bull rally that's happening, it's for sure. And market is broken out once again to make new all-time highs. So if you try to bucket the different parameters of the bulls and the bears, you can see that let's try to see the bulls what's in favor of that. The couple held pattern, the wide range bullish candlesticks on the indices, the weekly exponential moving average, Bollinger Band expansion, higher lows, mid and small cap indices, all-time high. Sectoral indices doing good, although not all of them are in bull zones with respect to the momentum. And the heavyweight stocks are also either sideways or bullish, not bearish. Crude oil and dollar index are in favor. US markets are near the all-time high, although there is a down week, mixed back week. It's at the very all-time high. The call ratio shows bullishness, and long build-up is what you see. It's long build-up. It's a mistake here. Long build-up that is in the futures also with respect to open interest on the futures. Options, so I put call ratio is also bullish. So what goes in favor of the bears is the fact that India is rising up. We have a pre-election volatility, and it could happen if institutions are still mostly in selling mode, although this week they have been buying. We are at the top of the trend line channel, so once it hits the reversal retracement could come in, and that's on both indices. So if you take ready to get big rounding numbers, once it hits reversal could come in, you got to be cautious. So that's how we so basically, as we summarized before, we are repeating that breakout for the second week, and an all-time high hit on Nifty, and Banknifty is also heading towards that. This is the last week before the election opens next week, and volatility is rising up at the same time when market is also trying to make the all-time high. So contradicting there, you have to be cautious, either stay out of the trade or place your tight stop losses, portfolio hedges, and then small portion sizes. Uncertainty prevails. So technically, if you see, it's mild bullish bias that I have for the next week, because charts are showing that, and we are at all-time highs with close by. Keep in mind the global cues like Russian fears, election, major events like this election, war, COVID, and all this could screw up your technical analysis, and then black scans could happen, so you have to be cautious, and then hedge your portfolios always. Have tight stop losses, portfolio level and position size, hedge. That's the only way to protect your capital and be in the game. So as long as 20,000 and 40,000 is maintained, we still may be in a rally. Right. But if you're breaching that on either of the side, we may have a continuation rally or a breakdown. So next week, 20,500, 23,500 is 1,000 point range is what I have for the Nifty, and 48,500 and 50,000 range that I have for Banknifty. That's levels for the next week. That's all I have. Subscribe if you like it, and then like if you like the video, and then comment and share and all that, right? If you like. Okay. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.